Weekly initial jobless claims declined and the trade deficit widened in June, and the market loved what it saw. We saw markets ripping higher across the board here today. In fact, we hit an all-time high on the NASDAQ composite, and we also had a closing all-time high on the S&P 500. Not quite an intraday high, but very close to that as well. We do have another jobs announcement tomorrow morning, as we always do the first Friday of the month, so we'll see where that takes us. But a lot of good movements within the market here today. Notice a lot of those CRISPR stocks really lighting it up to the upside, so that has helped our portfolio here for this presentation as well. So we'll get into all that, see what it means for our postures. Then we'll get into our trade application example, where I wanted to focus on a very well-known social media company that appears to be bouncing up and off of its rising 30-day moving average. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 5th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down into our description area. Make sure you're signed up for our email distribution list, so that way you can be notified whenever we post these videos. Remember, at the bottoms of those emails, you'll also find the stocks that are giving you overbought and oversold cluster signals within the S&P 500. In addition to that, we're heavy users of Twitter. I really appreciate those of you that click like and retweet on those market outlook related tweets. And if you're not following me already, make sure you're doing so. My handle is @BrandonVanZ. And then last but not least, we do have a group over on Facebook. Feel free to join that group at the web address you see listed in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And as you can see, I've got chart 4B pulled up here in front of us. Great day for the markets. You can see the S&P 500 was up 0.6%, and you can see what that looks like from a candle perspective. We basically closed at the high of the day today, and this is a new all-time closing high, as I mentioned in the intro, but we still have that high tag listed right over this candle from July 29th. So the high that day was 44.29.97. Today's close was 44.29.10. So we're literally less than 1 point away from breaking an all-time high on an intraday basis there on the S&P 500 as well. And so as long as the market doesn't drop as a result of the jobs report tomorrow, then we'll find out if we can kind of go into the weekend coasting with a new record there. Now, as far as I know, David's going to be gone for the next couple of days on vacation. The inside joke around here is that whenever David leaves on vacation, markets tend to fall. That hasn't worked every time more recently, but nonetheless, maybe we've got the David Settle vacation alert that we need to be aware of tomorrow as well. So we shouldn't get ahead of ourselves with our thoughts about going into the weekend strong. But as of right now, markets are setting up quite nicely. Of course, we continue to maintain that strongly bullish posture. That's been the case. Remember, anytime this background color is green, that means our posture is bullish. And that's pretty much been the case for the last 2.5 months here. And so not a surprise there. 30-day moving average continues to be green as well, telling us that price is above a rising moving average. On the Dow Jones Industrial Average, we were up even more. It was up 0.78%. And you can see, like the S&P 500, we closed basically at the highs of the session here today. Now, unlike the S&P 500, we did not have an all-time closing high on the Dow. That would have to go back to this candle on July 26th here. Intraday high is back over here on August 2nd. So we're a ways away from that. Again, anything is possible tomorrow. So it certainly could be breaking a record on the Dow Jones tomorrow as well. But this one's got a little bit more work to do than the S&P 500. So if it's just kind of an average day tomorrow, I'd say there's a decent chance that the S&P 500 can get there, but the Dow might be still waiting a little bit longer. If numbers are very robust and the stock market likes what it sees, then I think there's even a good chance that the Dow Jones could even hit a new high as soon as tomorrow. NASDAQ, you can see down below here, and by the way, the Dow Jones continues to have that strongly bullish posture there. NASDAQ hit an all-time high today. You can see the light green kind of label there that's lit up. It says yearly high today. It's the only one of these four that has that label as a result of the S&P 500 not quite able to tag its prior high. But the NASDAQ was able to. In fact, it's not just a yearly high, it's an all-time high. And as you can see, like the other two indices, we closed basically at the highs of the session here today. Another good sign. Remember, we talked about that on Tuesday as well, as that's generally a bullish sign when stocks are closing near the highs of their ranges. So some pretty good price activity there within the NASDAQ today. It was up 0.78%, so it tied the Dow Jones from that perspective here today, but the trend of the NASDAQ composite does remain more robust than what we've seen there out of the Dow. You can see that the intermediate line is at 87 on the NASDAQ composite, whereas on the Dow it's a little bit less than at 85. However, you can see the S&P 500 is leading all of the markets with an intermediate line at 90 right now. So you could really get away with saying that's probably our strongest market right here. And nothing wrong with that, right? Nice broad-based index like that. It is market cap weighted. Nonetheless, we've got good activity out there. Those of you that were in my top-down trend trading class on Monday, you might have heard me mention that from a new highs perspective, out of the 1,000 stocks that's in our universe called the Market Scholars 1000, over 200 of those hit a new 52-week high last week. So we're talking about a fifth of the entire index that is achieving those new heights there. And that's usually a sign of strength when we have broad participation. So like what we see out of that action. You can also see down here that the Russell 2000 had a strong day, is actually the best performer today. It was up 1.81%. Like the other three indices, we did close with, or basically at the highs of the day. But you can see we have a lot different shape to this particular chart compared to the other two. The NASDAQ, like the S&P 500 and the Dow Jones, closed with a bullish posture, a strongly bullish posture. Remember, that's what that deep green is telling us there. With the Russell 2000, despite having a nice snapback rally today, we continue to have a strongly bearish posture. So it's a little bit unique to find that 3 out of the 4 major indices have strongly bullish posture, and then we also have one of them with a strongly bearish posture. Usually, you might have a couple with strongly bullish and a couple with weakly bearish, but to have them kind of saying the exact opposites at extremes is interesting. Now notice that the Russell 2000 is also the only one that's trading below its moving average. In this case, the 30-day moving average is falling and price is below it, so we have that red line there, and that's usually considered bearish there as well. So it's not to say that it has to stay this way. Obviously, markets move and markets change, and that's why we look at these videos as often as we do and go through our analysis as often as we do. But as of this exact moment in time, the Russell 2000 is the one that is definitely the laggard from an intermediate perspective. Again, going down and looking at the numbers that are listed in the intermediate labels, notice that the intermediate line on the Russell 2000 at 46, that is tremendously different than the numbers that I just rattled off a moment ago on the other 3 indices. And so just got a lot of work to do there, and we'll see. Remember, this time of year is typically a little bit more bearish when we're in the August, September, even sometimes into the October time period. So we'll see if the Russell 2000 has a chance to lead the other markets lower during that historically weak period for the market. But right now, you look at those other indices and you don't have a catalyst at this moment in time to send the markets lower. You have the momentum clearly helping these markets along right now. And while valuations are definitely stretched at these levels, they've been stretched for a long time, and that hasn't led to a sell-off previously. So we can't just automatically assume because stocks are expensive that all of a sudden they're going to start spilling over tomorrow. We don't know what that spillover is going to, or how it's going to develop, when it gets developed. But we do know that eventually there will be a pullback in the market. So if it does happen in the near term and you start shifting your mindset from bullish trade setups into bearish trade setups, then those Russell 2000 stocks might be the ones that you can kind of pick on as the ones leading the way to the downside. In fact, that's what we've been doing in my factor-based swing trading class on Wednesdays. We actually had a nice winning trade at our max profit here today. So for those of you that are premium members, you should have seen my Telegram message to you this morning regarding that. But anyway, with our short selling ideas here the last few weeks in that class, we have been concentrating on those low size stocks, and there's a lot of them in the Russell 2000, of course. Let's go ahead and take a look here now at our 3 green arrows setup, and this will be chart 4D. So as we're pulling this up here, you can see we have some productive activity to report today. And that is in the form of the NASDAQ composite in the lower left-hand corner. Notice that we now have this light green background color showing up here. Now remember, on this chart 4D, what that signifies is that that particular chart has a what's known as a 3 green arrows signal. It's just a signal to let us know that there are 3 different technical indicators that are lining up bullishly all around the same time. And so the green arrow that we use up top here, the first of the 3, is going to be our 30-day moving average. When price goes above the moving average, it earns a green arrow. Down below here, we have a MACD histogram. That's our second arrow. You can see that that turned green as of today. What that does is it judges and measures momentum of a security. And you can see that after bouncing up and off of that moving average here more recently, we do have a little bit of a thrust of momentum there. And then the stochastic down below has held up very nicely. And this was kind of what I was referencing before when I said that it's a healthy sign for those of you that want to be bullish when markets and stocks are trading near the highs of their ranges. That's effectively what the stochastic is trying to measure. And so when you are closing near the highs of ranges, you're going to have a higher reading on the stochastic. So the more often you're closing near the highs of the day, near the highs of the week, near the highs of the month, the greater the chance is that that stochastic is going to give you a positive indication. And that has been the case ever since July 21st when we earned the green arrow on that particular metric. So the NASDAQ composite does have 3 green arrows. The other 3 charts are still in that mixed zone with a white background telling us that we have a mix of green and red arrows. All right, let's go ahead and take a look at our 1040 crossover method. And this will be chart 4C for those of you following along at home. Now, reminder that this particular chart's a bit different than the other 2 that we've looked at so far. This one's longer term in nature, so each one of these charts is 3 years. Each one of these candles is 1 week. And so it gives us a broader sense of what's been happening over a longer period of time with the markets. What we're looking for here are moving average crossovers. So you see a blue line and an orange line on each of these charts. The blue line is a less sensitive line that tracks a longer amount of time. In this case, 40 periods, and since we're using it on a weekly candle chart, that's effectively a 40-week moving average. The orange line represents a more sensitive moving average because it's tracking a smaller amount of time. In this case, just 10 periods. In other words, a 10-week moving average. And we're looking for those crossovers to give us a heads up as to whether our money is better served on the bullish side or on the bearish side of the market. Obviously, with a technique like this that is lagging by nature, remember that's the whole point of having a moving average. It's not just tracking what's happening today, it's tracking what has happened over the last 10 and 40 periods. You know you're not going to get the top when you sell, and you know you're not going to get the bottom when you buy. So you have to kind of go into it with that knowledge in mind. But you can see how it would have worked fairly well in the case of these charts, with the exception of the Russell 2000. I think there it would have been more of a struggle to kind of use that approach because you've had more choppy price activity there on the Russell. But as an example down here with the NASDAQ composite, you would have gone bullish on the markets back here in the first week of May of 2020 after the coronavirus was kind of wrapping up, or at least the worst part of it from the stock market's perspective, and you would have stayed bullish this entire time. Obviously, that has been a wise decision for those of you that have been participating in the markets over that time period. Now, we do use these lines underneath the charts to help us gauge whether we're kind of losing steam or not. And what I would say about this is the NASDAQ was losing some steam here about a month or 2 ago, but it's kind of stabilized here more recently. This green line you see down below is kind of tracking sideways now, whereas it was kind of rolling over and going down here. When it was rolling over, what that's telling us is that the more sensitive orange line was pinching towards the less sensitive blue line. And so it's kind of signifying a bit of a loss of momentum there. So now that we've seen the NASDAQ going higher again and hitting new highs, it's kind of allowed those two moving averages to kind of separate a little bit away from each other again. Now that's been the case on the S&P 500. So while it maybe hasn't felt like a robust runaway type of a market, what we have found is that the more sensitive line has been going up at an equal or better pace than the less sensitive line here. So you can see how consistent that's been up there between the orange and the blue line. They're both going up at approximately the same rate, keeping that separation there. So the bulls have been really pressing in to the S&P 500. You can see that the PPO is in the 92nd percentile right now, telling us that this is kind of in the top 10 of all instances of that type of separation. But that's been the case here for the last several weeks, in fact, since the start of the year. So, we're kind of at a territory here that is a little bit unheard of. I know David's been working with you on a couple of those concepts as well. On Twitter, I've noticed him posting some things about how long this intermediate run has been as an example. But this is another thing that is kind of giving us that heads up that this is rarefied air that we find ourselves in with the S&P 500. But again, it's not a reason to sell. It's just a reason to set your expectations accordingly and understand that we can't go up forever. Right now, the trends are bullish, but you shouldn't expect that the coming months are going to look like the last few months in terms of typical historical returns. So we'll see where it takes us. With the Russell 2000, notice how that looks a lot different on the PPO line compared to the S&P 500. Here you had all of these green dots kind of clustering up here at the beginning of this year, and then that line started to roll over and head down towards this zero line. Again, you can kind of see that pinching effect that's taking place between the orange line and the blue line here on the chart, signifying that we've got a little bit of a loss of momentum here, right? We haven't had any loss of momentum with the S&P 500, but with the Russell 2000 we have. And it takes a while for those crossovers to occur, but if there is going to be a crossover here at any point in the coming months, my money would probably be on the the Russell 2000 to be the one that does the cross the first. Now, that's a pretty safe bet to take because right now it's the closest to pinching. But just to be aware of that is where we are having some lagging price action is within the small caps. The large caps are still holding up quite nicely, which does play into our trade application example a little bit later on tonight that I'll talk about. Before we get there, let's go ahead and pop on over here to the internet briefly. I always like to say thank you to those of you that help support me and David as well here at Market Scholars with our objective of sending the information out to as many people as possible, and we use a word of mouth type of advertising for that known as social media. The more of you that like and share these tweets, the greater the chance is that other people out there will hear of Market Scholars. And as I always mention to you, we don't get paid to do these videos. So that part of our motivation to do them is to get the word out about our company for where we do get paid, which is for those of you that are our premium members out there. And so we're happy to do the free videos for you as long as we feel like we're getting the appropriate amount of support to do the videos, because the videos do take about 2 or 3 hours out of our day to put together. And so anytime I'm up in over 100 likes, I am happy about that. And you guys did not fail me once again. You were at 107 likes. So thank you to everybody who helped support us there the last time around. Again, David's not going to be here tomorrow. As far as I know, he's going to be out of town. But I will plan on doing the video again next Tuesday, assuming that we get up in over 100 likes again. If we don't get up in over 100 likes, then I'll just have to take a look at what my schedule looks like that day and see if I can fit it in or not. So I'll prioritize it if you guys prioritize supporting it. Also, while we're over here on Twitter, you guys have been seeing me tweet about the CRISPR stocks a lot lately, and today was one of those days for the ages. One of my best personal days in my trading account that I've had since the bottom of the coronavirus. So this was an epic day here for those of you that are following those CRISPR stocks. In fact, many of you probably are, because we have bullish trade ideas on 3 out of these 6 charts you see in front of you right here in this Market Outlook video. Remember, we've got a long call vertical spread on CRISPR, which is the chart in the upper right. We've got a long call with a short call against it, diagonalized, what I refer to as covered call on steroids on Editas, which is that chart in the lower left-hand corner. It was up 18% today alone. And then we also have sold puts on Intelia, and it was up 12%. So we see some just massive moves out of those CRISPR stocks today, and this actually followed up a pretty strong day yesterday as well. These charts that you see in front of you here are actually just 1 week charts, and so to get a sense of how much these stocks have moved in just 1 week, Beam is up 20%, Caribou is up 40%, CRISPR is up 10%, Editas is up 29%, Intelia is up 17%, and Verve is also up 17%. So these stocks are starting to lock it in big time there. We actually spent quite a bit of time talking about them once again in my question and answer session here today. It seems like those CRISPR stocks have been a common theme for the last couple of months that the students have been wanting to ask me about and pick my brain about, and how we handle it and different things like that. So if you're a premium member of Market Scholars, of course, that's one of the perks that you have is taking a look at those classes that we have recorded, and even asking David and I specific questions that you want us to address. And so today, as always, we had a fantastic session. We had a question about how to interpret the dividend increase announcement charts. We had a question about looking at KLA 10 Core as a long-term investment. We had a question about how do we think about strangles or short call verticals when we're thinking about selling puts. We had a question about Clorox after they had fallen earlier this week. I had a question about what are my thoughts on the taxation of unrealized gains and losses and the possible taxation of Roth IRAs in the future. Of course, all that's hypothetical, but shared my thoughts on that topic as well. We also had a question about taking a look at General Mills from a dividend-paying capacity, and then we had a question on comparing CRISPR versus Editas here currently as a trend trading candidate. So if any of that is of interest to you and you're a premium member, check out our recording on our calendar today for that. Then David also taught his portfolio management with ETFs class here today, so check that out as well. Again, he'll be gone tomorrow. Normally he would have his technical analysis class tomorrow, but he's taken a much-deserved vacation day there, so we'll wish him well with that. All right, let's go ahead and get back on over here now to our charts, and let's do some 12-grid analysis. So we're going to start off with chart 5A, which is the asset class 12 grid. And you can see here that we've got a bunch of pink and green charts here. For those of you that are newer to watching the video, the green background charts are the ones that have a strongly bullish posture if they're dark green. And then the dark pink background colors are the ones with strongly bearish postures. And then we do have slightly, or what we call weakly bullish, which would be something like EEM up here at the top, where you can see that that color of green is a slightly lighter shade of green. And then we also have weakly bearish, like we have down here with gold, where it's a slightly lighter shade of pink. So as we're looking at these charts, I like to kind of point out anything that's catching my eye from either a bounce perspective or a trend continuation perspective. I guess I'll start with Bitcoin. You guys have been hearing me talk about this the last couple of weeks as a very interesting opportunity to go bullish, right? And we've been waiting for a long time for us to have that particular sentiment around Bitcoin, because Bitcoin had been in the house of pain for several months here after topping out earlier this year. But back over in this time period, about a week and a half or 2 weeks ago, it really had a nice burst of energy up and above its rising 30-day moving average, and has really been stabilizing there ever since. It had another great day today. It was up 4%. Now, interestingly enough, we went from having oversold cluster signals here just a couple of weeks ago to going up so rapidly that we now have an overbought cluster signal. So we'll see if this kind of stalls things out here in the short term. But I continue to think that for those of you that are willing to speculate on Bitcoin, these are some levels that are very interesting, at least from my perspective, simply because you can see that we now have price above a rising 30-day moving average. Notice that moving average was curling lower. It's now curling higher. And of course, we do have strongly bullish posture right now because the intermediate line is in the upper reversal zone above 80th percentile. So what this means for Bitcoin or the cryptocurrencies in general longer term, I don't know. But what I do think in my own head is that they do represent interesting trades in the near term right now. Other charts of interest, we talked a little bit on Tuesday about the US dollar. This one's kind of been just trying to figure out where it wants to go, but I will point out that it does have a dark pink background telling us that we have a strongly bearish posture. While it has been stabilizing in the last week or so, notice that it continues to trade below that moving average. So the longer it stays below the moving average, the more comfortable it becomes below it, and you might have a chance to see the US dollar roll over. Now remember, if that does happen, that should help support interest in commodities. Today we did see gold fall. Remember, we do still have the bear call spread going on gold right now, so I don't mind seeing gold fall right now. We'll see where it takes us, but it's just kind of stalling out here, so it's perfectly fine for the trade that we have going on it. But I will point out that gold now has a light pink background color. Remember, that was not the case on Tuesday. It was green. So there's been enough wear and tear the last few days on gold where we now have a weekly bearish posture again. Now, having said that, it's not all roses from that perspective. And again, I'm coming at it from a term of having a bearish trade on this right now. But you will see that the moving average itself is green here. So we have some nice stabilization there. So I'm just kind of biding my time right now, and I'm hoping to get out of the bear call spread at max gain here in the next few weeks. And then after that, I'm going to take a fresh set of eyes to it. And if it looks like it's stabilizing around that upward trending 30-day moving average, I might be willing to flip right back on over to a bullish status on gold with future trade ideas. So we'll keep our eye on that. Oil was up nicely today. It was up 1.91%, but kind of like I mentioned on Tuesday, oil has been just looking really rough here more recently. It's really fallen on the sector selector as well when it comes to the oil companies themselves. But even oil prices have kind of stalled out and almost given us like a triple top formation there. And so not a big fan of what I see out of oil these days, as we now have a falling 30-day moving average. So of the two, we kind of see a transition taking place here from my eyes perspective, where gold was once weak and it's starting to do its part in trying to turn bullish, and oil's the opposite. Oil had been strong and it's doing its part to turn bearish here more recently. U.S. Treasury yields were up today. This is actually the third straight day of them being up. Now we have to take that in context. You can see we're still very close to multi-month lows here. So we were up a touch, but we're still tacking in at just 1.21% at this moment in time. So this is a strongly bearish posture, continues to be despite the 3-day move higher in yields. And of course, the opposite of that, you can see long-term U.S. Treasuries continue to motor higher at a pretty nice pace. A down day for Treasuries, but obviously a very strong trend in place there in the United States and in the foreign markets. And again, keep in mind, high yield bonds look a little different than the other bond markets because they're so highly correlated to oil prices, as I've instructed you guys many times along the way. You can even see that playing out in real time today. Notice high yield bonds were up today. That's a pretty nice looking candle there. And you might be wondering, well, why was that? U.S. Treasuries, government bonds, were down. Well, just take a look at down here. With oil up, it shouldn't be a surprise to also see high yield bonds up, because a lot of those companies that issue that junk debt or that high yield debt are within the oil patch there. Also, we don't talk about it a lot, but be aware that preferred stocks broke out here today. We're trading at new multi-month highs there on preferred stocks. We don't talk a lot about them, and they're a little bit harder to trade, especially in paper money. But for those of you that are looking to kind of track that, its ticker symbol PFF is a pretty good ETF that can kind of get you access to that part of the market. EEM was up about 0.49% today, so not quite up as much as the S&P 500. But notice that the EEM has that green moving average, whereas that's EFA. If I said that wrong, my apologies. EFA, which is the developed foreign stocks, has the green 30-day moving average, which tells us prices above a rising moving average. Now, the chart does not look nearly as strong as the S&P 500s. But if you look at the chart just to the right of it, which is EEM, This chart looks a lot better than this chart. First of all, this chart has a dark green background color, and then take a look at the positioning versus the moving average. EEM is still grappling with overtaking its 30-day moving average, mostly as a result of what's been happening with Chinese stocks here more recently. And as I mentioned to you back here when we were getting these oversold cluster signals, don't be surprised if we get some sort of a mini short-term pop higher in EEM and then it rolls over, right? My assumption when we get a setup like this is that we will get a short-term pop. The real question is, does it lead to an actual trend change? More times than not, a trend change does not occur. So more times than not, this is an opportunity to get out of those types of stocks or reload the gun on a bearish type of a trade when you see it starting to roll over again. So keep your eyes open for that possibility there on EEM. Let's take a look now at our sectors. This will be chart 5C. And as we can see here from a sector perspective, we did have, of course, a lot of green on the board today in terms of one-day performance. It looks like we had a couple of sectors that were up over 1% today, actually 3 of them. We were led higher by financials. They were up 1.31% today. Energy stocks were up 1.13% today, and then utilities were up 1.09% today. So a little bit of odd bedfellows there, so to speak, when it comes to the day's winners. Now, of course, one day does not make a trend. So important for our purposes here is to try to determine where do we see strength from a longer period of time and where do we see weakness from a longer period of time. And from that perspective, this color of the dark pink background should really stand out there for you on energy off to the right-hand side. It's the only one that has a strongly bearish posture right now. Its intermediate line is at 30 and falling. You can see that it is the only one of these sectors that remains below a falling 30-day moving average here. So great to see it up over 1% today, but this thing has been blasted so much in the last couple of months that a 1% move isn't really doing much to change your opinion of the chart quite yet. On the flip side, the charts that continue to impress me are the same ones I've been talking about for the last couple of weeks here, which are the charts in the corners, right? We've got the technology in the upper right-hand corner, we've got real estate in the lower right-hand corner, and then we've got healthcare in the lower left-hand corner. Those are the areas that I think have the strongest looking charts for an intermediate perspective, looking for kind of trend trades or what have you. So every trader is a little bit different, right? You don't have to be a trend trader. Obviously, if you want to be one and you want to be trained up in that particular venue or that strategy, you're welcome to join me in my Monday top-down trend trading class if you're a member of Market Scholars. But some of you might be bounce traders. And that's kind of where I wanted to go with our conversation here today for our trade application example. Wanted to spend a second here before we get to it to take a look at the communications chart up on the top rung here. Now you'll notice that communications actually has a weekly bearish posture right now. The intermediate line is at 65 and falling. But what caught my eye with communications today was that nice bounce up and off of that rising 30-day moving average right there. And remember, this is XLC, so this is the market cap weighted version of communications. And so you're going to have your big internet players be the most dominant names. So a lot of times when you see a chart look, like this, then that means that the biggest companies within that sector are more likely than not going to have charts that are similar to that as well. So some of you might look at communications itself as a bounce candidate if you just wanted to trade XLC, but what I opted to do here today instead was to look at one of the biggest components there within XLC. And that particular stock is one that many of you are quite familiar with, Facebook. I'm not a big Facebook guy myself, I must admit. I do post our market outlook videos and things over there just as a result of our business, but I don't even have a personal Facebook page, and I don't follow people there or what have you. So I don't really know much of anything about Facebook myself. I'm a Twitter guy, but I do know that I'm kind of odd from that perspective, where most of the world is on Facebook. And it is a hugely successful business, obviously an advertising powerhouse as money has moved from traditional advertising onto the internet to get a much more specified user base. And Facebook has not only dominated with their main platform, but also with WhatsApp and Messenger and Instagram. I mean, it's a powerful company. And you can see here that they struggled a little bit last week after reporting their earnings. They actually beat the estimates pretty nicely. They came in at 361. Estimates were 303. So easily beating analyst expectations, but maybe it was future guidance that was a little bit of a letdown. Whatever it was, the stock did fall the next day and continued to fall. Now you'll notice where it started to recover was exactly where we want it to recover. In other words, stabilizing right on the launch pad of the rising 30-day moving average. And so for the last couple of days, we've seen a nice bounce up and off of that rising moving average there for Facebook. So I wanted to be able to try to take advantage of that with a bullish trade. Now keep in mind what I mentioned earlier in this presentation, which is we're kind of heading into a weaker period of time for the market. So it makes it a little bit more difficult to get kind of really aggressive about a stock. At least from myself. And sometimes, that does me in. Sometimes I'm a little too conservative for my own good. But knowing that weaker time period is just around the corner, rather than buying calls or doing something really aggressive on this, what I opted to do was to sell a bull put spread on Facebook. And remember, I always do these trades during the market session. So the trade was done earlier today. I sent out the Telegram notification to all of you that are premium market scholars. So that way it gives you an advance notice if you want to take the trade before everybody else who's watching the free video later that night. So make sure you're taking advantage of those resources as well if you're a premium member of Market Scholars. And if you're not, we'd love to have you become a premium member. So make sure you check out our pricing page there. But anyway, what I did was I sold I think it was the 345, 340 bull put spread. And I think it was for the month of September. I got around a 30% return on risk, which is what we typically shoot for those credit spreads. For those of you that are unfamiliar with that type of a trade, basically what I did was I sold the 345 put. I bought the 340. By selling the 345, which comes with a premium that's higher than the 340, I'm collecting the difference between those two things. So if you're selling something that's more expensive and you're buying something that's less expensive, you end up with a credit in your portfolio. So that's what we had here today. Now, the reason you're buying the 340 in this case is in case you're just flat out wrong. And if this stock just rolls over in a big way, you don't lose any more money the further it drops below 340. Now, you'll still lose money on the trade. You just won't lose additional money beyond 340. So you're kind of protecting yourself with verticalizing a trade like that. Now, when you're asking yourself, well, what is it that you're hoping to accomplish with that trade setup? Basically, all I need to have happen with this trade is for the stock to stay above approximately 345. It's actually a little bit less than that because you can factor in the credit, but just to keep the math simple, just assume 345 is that area where I want to see this stock stay above. So as long as this trend continues to hold in the coming month or two, in other words, higher highs and higher lows, then that trade should be fine. On the other hand, if the market rolls over in a big way in August or September and this stock goes down with the market, then I know that I have a risk-defined trade. And if it falls way down below 340, then I'm covered no matter how far and fast it falls. So that was the trade idea there based upon the signal that we received when the blue line went bullish here. Notice the background color went from pink to blue on this chart 3A, which tells us the near-term posture is now bullish. Not only that, but the intermediate posture is also bullish again. Last week, the intermediate line did fall out of the upper reversal zone, so we had a bearish posture for a brief amount of time, but we've had enough of a bounce the last couple of days on Facebook where this green line is now just slightly going higher again. I know it's hard to see with the naked eye. That's why we have the labels right there telling us that it was at 55.61 and rising. So we are back to a bullish posture both on the near term and intermediate perspective. A nice bounce up and off of the rising 30-day moving average and supporting that conversation with a bull put spread. So, hope you got value out of today's video. Again, a reminder that David is going to be off for a couple of days, so I will plan on being back with you on Tuesday as long as I get enough likes there on Twitter. I'll make that assumption that I'll be with you on Tuesday there. So if you did get value out of the video, that's all I ask out of you. Take 5 seconds out of your day. You can do it completely for free and just simply click like, and that will help you, urge us on in order to continue to do these videos as often as we can. So I want to thank you for checking out this video, and I'll look forward to seeing y'all next week. Take care, everybody. Bye-bye.